Welcome to my channel. I will talk about in this video about fund checking and fund reservation. So let's start. As all of us know that what is the difference between budgetary control and encumbrance accounting. For the budgetary control, it's just for spending control process by validating if transactions have sufficient funds and if they are subject to spending control. Stores the budget, performs fund check, funds reservation when transactions are submitted or approved, maintains budgetary control balances for expenses accounts, including budget fund reserved as a commitment for PR, obligation for PO, and expenditures for AP invoice. Funds available balances based on the budget calendar and control budget structure for chart of account segments you control by. For budgetary control, there is no any journal entries. The journal entries only for encumbrance accounting. Also, for revenue, liability, and equity accounts type aren't supported for budgetary control. For the budgetary control, once you enable the budgetary control, you will start to select which segment, which value set values will be under the control of your budget, because as you know that in Fusion there are two options: either budgetary control or encumbrance accounting, or both, that you will working or you will enable the budgetary control and encumbrance accounting. Encumbrance accounting, it's just for create encumbrance journal entries for requisitions, purchase order as a procure to pay cycle. Also creates actual journals entries for invoices and journals using the standard accrual with encumbrance accounting method in the Subledger Accounting module. So for the encumbrance accounting, just for create journals for BR, PO as a procure to pay, and also actual journals for EB invoice and GL journals. But in this case, the SLA or Subledger Accounting method must be standard accrual with encumbrance as accounting method, which is assigned to your ledger. Optionally, create invoice encumbrance to report actuals as a payment rather than invoice validations, because you have two options: either create the encumbrance either at the invoice validation time or at the payment time. Stores and maintains the encumbrance and the actuals account balances in general ledger based on the ledger's accounting calendar and chart of accounts, because by the end you need to make a comparison between the encumbrance and actual account balances to check what is the budget was, what is the budget now, what is the actual, and to make this comparison by the end of year or whatever. Loads budget balances into general ledger for comparison with actual balances. In case of you need only just budgetary control without stopping or without checking the fund and failed fund and restrict, or the users cannot complete the transactions. If you need just reporting budgetary, you can only upload the budget balances into GL to make a comparison by the end also by the budget balances and the journal or the actual balances which is registered during a period or during a quarter or during a year. Doesn't automatically maintain funds available balances in general ledger, it's only automatically maintained in budgetary control module. In Fusions, the budgetary control, it's like a separate modules. It's not related to general ledger like before in Oracle eBusiness, so it's maintained in budgetary control module, not in GL. If we're talking about terminologies used in encumbrance accounting, first of thing, what is encumbrance accounting? Encumbrance accounting, as we said before, that this is accounting of expenses from a time when it's tended to incur till it becomes actual, from the PR until invoice in accounts payable. Most of the spending happens in any organization during the procure to pay as P2P cycle or process. There are multiple instances on the procure to pay process that uses encumbrance accounting. For example, creating and approving requisition, creating and approver purchase order from the requisition, creating and approver invoice matched to the purchase order, etc. So as you know, that's the cycle of the procure to pay started from purchase requisition, approve purchase requisitions, recreate or generate the purchase orders from the approved purchase requisitions, then make a receipt, make invoice, and match it to the purchase order or receipts or whatever. Or you can start it from the procure as a purchase order, then make a receipt, then make invoice matching to purchase order or receipts. It's depending what is the matching type, either 2-way, 3-way, or 4-way. What is the commitment? Money that is committed to spending in the future is called commitment. In Oracle, it is the money committed to being spent on a purchase requisition. Commitment on PR document. When the requisition document is approved, commitment happens. So at which time? Once you approved the PR. The obligations, when requisition is converted to a purchase order or to PO, the order is approved, then commitment is replaced by an obligation. It's an obligation to pay the amount to the vendor against what? Against the goods, services ordered as per the purchase order terms and conditions. So the commitment at the PR level, obligations at the PO level. PO level means that if there are PRs created, once you approve it and generate or converted this PR to PO, it's the encumbrance will be replaced or will be changed from commitment to obligation. Encumbrance entry, again, it's a journal entry created when a reservation is placed on requisition or PR. The type of the encumbrance which is created either, again, is commitment or obligation. What is the budget? That there are the amounts that are allocated to a particular account or project to spend on planned activities. Again, once you enable the budget and enable the configurations, you start to select which segment and which values, for example, the value for the value set of the account, and this is the budget, that is the amounts that are allocated to a particular account or project to spend on planned activities. What is the actual? The actual expenditures that are incurred when offset the commitment or obligation. For example, it's encumbered amounts on the PR and the PO. In Oracle, actual are booked when the invoice are received from the vendors for the goods and services procured and matched to PO. Once you make the matching to the AB invoice, this encumbered amount or the actuals are booked immediately at the time of matching the invoice with the purchase order. Funds available, there are equations by the end of the period or by the end of your period or accounting period. Its fund available is equal budget minus actual expenses plus encumbrances. This also through inquiry the budget balances. Once you find this there, this is the equations of how funds available is calculated. Regarding the default date rule for the budgetary control liquidations, because during make the PR and the BO there are the budget date. So what is the default date rule, or what is the options for the date rules for the budgetary control? How do you define the default date rule for the budgetary control liquidation? You can select the budget date for the budgetary control liquidation for a period related or packing document by using the default rate or default date rule options. What if the three options are there? System date. You can select the system date that use this option if the period is open and the control budget is active in the current period for requisitions to go through. Second option is a current transaction budget date. You can use this option if liquidations are expected to happen in the same period as the purchase order's budget date. Period related transaction budget date. You can use this option if liquidations are expected to happen in the same periods as the requisitions budget date. For example, you can make a BR in October and you can make after that or converted this BR to BO in November. So in case of you need to use the same date of the requisition or the period related transaction budget date, you can use this option. System date, the open or the period is open and the control budget is active. For current transaction budget date, it's expected to happen in the same period as the purchase order's budget date. And this is depends on your organization requirement. You can decide which date rule it will be available or it will be good or matching with your requirements. For the encumbrance accounting in P2P process flow, for example, this is a cycle or this is the cycle of our create and approve PO and BR and blah blah blah. For the goods and the services, you can start to create requisitions. This is a procure to pay process flow. For these create requisitions, it's still unapproved. Commitment is raised. For review and update, encumbered and commitment will be applicable, or this is a commitment of encumbrance of the PR. Then you can, for the create and approve the purchase orders, it's also encumbered and translated or converted from commitment to obligations. For receive, invoice and reconcile, it will be releases. For obligations and make the invoice, it will be actual as expenditures. So from commitment to actuals, it's through procure to pay cycles, from create the requisitions until to create a matching invoice to either purchase order or to receipts. And as you see here, the commitment still, once it's approved and converted to BO, it will be changed or converted from commitment to obligations. Receive, invoice, reconcile, release and obligations, or release the obligations, then it will be converted to actual as expenditures. And during these cycles, also in the budgetary inquiry in GL or in budget modules, you can also check the amount, that some amount is still in commitment. After that, after the BR converted to BO, it will be moved from commitment to obligation field. After that, it will be show as actual or actual expenditures. If we talk about the accounting entries, for example, in case of you, for the budget or business transactions, that the budget allocated for expenditures for 1,000. Until now, there is no commitment, there is no obligation, there is no actual. Commitment PR. Obligation means PO. Actual means AB invoice. For example, you created a BR for $400 instead of 1,000. Is still budget remaining 1,000. There is no commitment, obligation, actual. In case of you approved the BR for 400, so the budget remaining will be the net between 1,000 and 400. It will be 600. 400 of the BR or the amount of the approved BR, it will be shown as a commitment. After that, BO auto created, or you generate the BO from the BR. This is also the same for the 400. So 600 is still budget remaining, 400 is still in commitment. Once you approved the BO for 400, it will be moved from commitment to obligation. This is what I said before, This is the cycles, or this is the accounting, or this is the movement of the budget or encumbered amount from BR to BO. After that, once you make invoice received and matched to BO, you will find, for example, for 300, if you make invoice matching for BO for 300, 100 still will be in obligations, because before it to 400 you just matching to 300, so the net between 400 and 300 will be stay in obligations, and 300 of this invoice will be actual. This is the flow for that you, for example, you put or upload or entered the budget amount. After that, starting the procure to pay from PR to the invoice matching, and how the amount or the encumbered amount moved from commitment to obligation to actuals. Again, if you create another invoice for 400 which is still remaining in obligations, you will find that this 100 also, the obligation amount will become 0, and this 100 is transferred to be actual. So by the end, the 400 of the PR which is created will be moved from commitment to be actual. If we're talking about the journal entries, for the purchase requisition approved, the encumbrance type we said commitment. There are two, debit and credit, for any journal entries, debit and credit. For the debit will be budget account from BR distributions. For the credit will be reserved for encumbrance as a commitment. For example, you purchase order purchased or requisitions, in this case will be unreserved. Still we are in commitment. So for reserve, for the encumbrance here which was be created will be debited, and the budget account from BR distributions will be credited, because this is reverse the first journals. After you purchase order approved, purchase order reserved as obligations, because now we are at BO level. Again, budget account from BO distribution, instead of PR it will be BO. Again, reserved for encumbrance, but instead of commitment it will be obligation. For the purchase order receipts, when accrual on receipt equal yes, because we have two options, either accrual on receipt or accrual at period end. Here delivery to expense locations, here the obligation reversal like commitment or reversal. Again, reverse for encumbrance obligations will be debited, and budget account from BO distribution will be credited. For the invoice match to BO, when again accrual on receipts flag equal no for expense, here equal yes, so the invoice match to BO, again obligation reserve for encumbrance obligations, and the budget account from BO distributions also will be credited. What's the difference between funds checking and funds reservation? Fund checking is run from the invoice action menu during make a check fund. Once you complete the AB invoice, there is one option in the actions to make a check fund. This is fund check means what? It compares the transaction amount on documents such as purchase order or invoice against available fund. For example, we upload budget for X account for 1000 and we make BO or AB invoice for 900. Once you make a check fund, it's just make a comparison between the amount or the amount of these transactions against the available funds, with consideration for what? Tolerances and overrides. Tolerances that you can define some tolerance tools or solid rules and overrides, so the system will also consider these tolerances and overrides to calculate the or to pass or fail the fund checking. Fund reservations is runs during invoice validations. So during you make the invoice validations, the fund reservation will be pop up along with other budgetary control validation. Performs the same comparison as a fund checking, but consumes funds from the budget and reduce available funds. Fund reservation means if the 1000 USD, for example, as a budget uploaded for X account, and now I am making the AB invoice, and during validation this invoice, the reduced available funds will be, for example, from 1000 to be 100 because 1000 before, and we make the invoice for this X account as 900, so the available fund will be the net between this and this, which will be 100. This is the difference between funds checking and funds reservations, either at the time of the enter PO or invoice to check the available funds for the account in the distributions of the transaction. What happens when I select the invoice action to check funds? Again, the check funds, it will be compare the invoice distributions against available funds with considerations, tolerance, and overrides, and provide the result of the comparison that this is the available fund and this is the invoice distribution amount or whatever, and this is the net after, or the available fund after you complete this invoice. Saves any pending changes to invoice line and distributions. Doesn't consume funds from the budget. Doesn't affect available funds. Also, if the check fails for any invoice distributions, the fund status of the corresponding invoice line as well as the invoice is failed. You can validate an invoice that failed fund checks. This is how or what the check fund actions doing during take it or during make a check fund on the invoice. What happens when I request a budgetary control override? There is one option in Oracle Fusion that to override the budgetary. What happens when I request a budgetary? When funds are insufficient or budget period is closed, you may be able to override a budgetary control failure. You must first enter a justification for the override. Next step depends on who has the authority to override the budgetary control failure. So when there is insufficient fund, you can, or there is one options in Fusion to override, to path or to change the status from insufficient to passed check fund. What happens when you select the override action for a different override authorities? That who can override, you or the other users or no one? Other users means that send a notification to the users who can override. No one means you can send the notification to the budget managers, or you can consume fund from the budget and validate the invoice. For the budget manager that during define or configure the budgetary control, there is one field to enter the budget managers. So if the override actions or authorities is no one, so it will be passed automatically to the budget manager to take the actions for override the budget. How can you release the funds held on an invoice? First, you can perform one of the following steps: that contact the budget manager to review and make necessary budget adjustments, such as changing amount, budget date, or distribution account. You can override budgetary control failure. To complete the process, that you can optionally run fund check to ensure enough funds are now available. You can revalidate the invoice to release the hold. Also, you have to know that the person with the override authority has to revalidate the invoice again. For example, you make an invoice, after that you found one hold related to the funds. Once the budget manager make adjustment or changing amount or date or whatever, again you need to revalidate. Who will be revalidate? The persons with the authority override has to revalidate again the same invoice. What does it mean when an invoice has a fund status of partially received? In some cases, once you make a validation and you click on the status of the invoice, you will find the status of the invoice is partially received. What does it mean? That a fund status of partially received indicates that some or but not all invoice distribution for an invoice pass budgetary control validations. For example, if an invoice has a line with multiple distributions, because we have three levels of the invoice: header, lines, and distributions. Maybe during enter the invoice you will make one line, for example for 100,000 USD, and in this 100,000 as a line you can create a lot of distributions. So in this case, if one invoice distributions fails the validations, the fund status of the invoice line is reserved partial. So this is what is the means of partially reserved. Also, a fund status of partially reserved can occur at invoice header level and invoice line level. For the invoice line level, we said that, for examples, under line there are a lot of distributions, or for the invoice header level, under the invoice header level we have a lot of lines. So one of them is not reserved or partially reserved, so the status will be reserved partial. What happens when I validate a credit memo that requires budgetary control? Credit memo reverses the charges for an invoice. So when you create a credit memo against a standard invoice, the impact of the invoice is reversed. Validating a credit memo increases the available funds. What happens to the available funds when I apply prepayment that requires budgetary control? Again, once you enable budgetary control, it will be applicable on the accounts which you mentioned in the segments, and these segments or these accounts you can record or enter it either in credit memo like the previous case, in procure to pay, in matching invoice, non-matching invoice, and the prepayment. In the prepayment, what is the available funds or what happens to it during make apply to prepayment? Applying prepayment to an invoice increases the available funds. For example, you create a prepayment for 100 USD. You make validate the prepayment to consume the budget and reduce available funds for the prepayment account. After that, you make the payment for the prepayment to be available to apply to a standard invoice. After that, you create an invoice, for example, for 300 USD. In this case, this invoice as a standard. After that, you make the validate the invoice to consume the budget and reduce available funds from expenses account used in the invoice. In this case, it will be reduce the available funds by 300 USD. After that, you are going to apply the prepayment to this invoice. When you apply the prepayment to the invoice and revalidate, which release the 100 from the prepayment account. So the first time it's reduced. Once you apply the prepayment to the invoice, it will be release the funds of the prepayment invoice amount again from the prepayment account. So in the summary, prepayment application releases fund of 100,000 and the invoice consumes fund of 300 USD with net decreases to available fund of 200 USD. This is the case in case of you make a prepayment for the account under budgetary controls. After that, you apply this prepayment to the invoice with a different amount. What happens to the available funds in this case? What happens to the available fund when I perform a final match on a purchase order that requires budgetary control? Purchase order is finally closed, which release funds for the quantities that aren't received or invoiced. For example, If a purchase order of 1000 USD has only one invoice for 600 USD, the final closing of the purchase order releases the 400. 400 is the net between 1000 and 600 from the purchase order and adds it to the available funds. So during make or change the status of the PO to be finally closed, the system will check how many invoices are there. For example, here we have one invoice for 600 and the amount of the PO was 1000. So the 400, which is 1000 minus 600, will be releases or adds again to the available funds. When does the encumbrance of purchase order get reversed? If the purchase order requires budgetary control and you accrue at period end, the encumbrance reverses when you account for the matched invoice. Why does this invoice have budget control actions? An invoice requires budgetary control if you match the invoice to a purchase order and the budgetary control is enabled for the requisitioning business unit associated with the purchase order, payable invoicing business function, transaction type of matched invoice. Also, you don't match the invoice to purchase order and the budgetary control is enabled for invoice business unit instead of requisition business unit, payable invoicing, also business function, and transaction type of unmatched invoice. What happens to budgetary control obligation, a PO, when I match the PO to an invoice? If you accrue at period end, when you validate the invoice, the fund move from obligation bucket to expenditure bucket, so overall fund availability isn't impacted. The matched amount and any additional variances on the invoice are reserved as an expenditure and reduce the available funds. The PO fund status is updated to liquidated or partially liquidated, because sometimes you can make match invoice to PO as to the full amount of the PO or to partial amount of the PO. What does this invoice have a funds hold? The invoice validation process again places a funds hold on invoice, in which cases the funds available are less than the funds requested for the invoice, or the budget date on the invoice is not in a period or open period. It means the budget date is in close period. What are the funds status and what do they mean? Fund status indicates the fund check or reservation status for invoices requiring budgetary control. Fund status is not attempted that the fund check or reservation hasn't been attempted. It applies to header, line, and distributions also. In case of you find the fund status is not reserved, no control budget, it means that fund check or reservation was performed, no control budget was assigned. This only at distributions level only. Not reserved or not applicable, again fund check or reservation was performed, funds validation wasn't required. It also applies to header, line, distributions. Not reserved partially or partial funds, it's again the funds check or reservations has filled for some lines or distributions. Also applies to header, lines, not distribution. Not reserved passed, fund check or reservation has passed. It applies to all header, line distributions. Not reserved warning, it's also fund check or reservations who has warning. It's applied to all level. Failed, fund check or reservation was attempted but failed. It applies to all, like the same of path to header, line distributions. Reserved, it's applied to all. Its fund were reserved for all line and distributions. Reserved no control budgets. It's applied only to distributions that fund reservation was performed, no control budget was assigned. Reserved partial funds were reserved for some lines or distributions. It will be applied to header and line. Last one is reserved warning and not applicable. For the reserved warning fund or reserved with warning, it applies to all. Not applicable fund reservation was performed and fund validation wasn't required. It's applied to also all for the header, line, and distributions. Thanks for watching.